intact. I would also look at a Radico Khaitan and Oil India, all of them winners in this kind of a market. Radico Khaitan once again in the consumption space. So you have the FMCG sector, the only one looking a little robust, and Oil India also doing fairly okay. Positive brokerage reports could be one of the reasons there. I don't know if you can quickly pull it up, but the two new listings, I want to see what happened to DOMS and Shelter Housing, because they opened with a pop. At least DOMS opened with a mega pop, and we should pull that up on our screens as well. You had a 690 rupee issue price stock which opened at 1400 bucks, and that this morning was reflecting the story of the markets, where there is euphoria and a bet on companies which are going to give you upside. Is that bet reversing? Is this a small correction which is very healthy and required in small doses? Remains to be seen. So not bad at all. Not bad at all. The run up is a little sliced off the top, but for anyone who got an allotment, I don't think they'll be complaining. You know, Niraj, after a big feast, you need to go on a bit of a diet. Is that what the market is doing? Cutting down the splurge? You need it. You need a purge, don't you, after a big feast?
Yeah, and well, certainly seems like that. The market falling under the weight of its own build-up that we've seen in the last few days. Let's try and understand how serious does this look. We'll get in Dr. C.K. Narayan in moments from now, but let's kickstart the proceedings with Rajesh Palvia. He's SVP Technical and Derivatives Research at Axis Securities, is with us on the show. Rajesh, good having you. Thanks so much for taking the time out. How do you view this pullback that we've seen today? More so at the broader end, but the Nifty too is participating about 300 points from the day's highs.
Good afternoon. So this is first time happening in the market after a long uptrend which we are seeing in the market since last couple of weeks. This first time we are seeing that market has shown some significant profit taking, and now Nifty trading at very important and critical support area, that is at around 21,250, and most of the put writers are now covering the position. That clearly shows that now again they are on the back foot, as in the first part of the day, yes, there was aggression at 21,400 strike, but now they have covered most of the position and now shifting it back to 21,000, even 21,200 strike. So that clearly shows that the confidence is a little shaky at this moment for near-term to short-term perspective on the Nifty, as well as even on the Bank Nifty front. Also, the major the put writer base was at around 47,700. That has already taken out by the market. So for Bank Nifty, again, the put writers are now shifting back to 47,000, even 47,200. So that clearly shows that, yes, there is a hit on the confidence of the market at this moment. And we could see further more pressure, or we can see further more follow-up selling in the market if we breaks below 21,250 on Nifty, and for Bank Nifty, if he breaks below 47,500, then we can see furthermore corrective action from the current level. But overall, long-term structure is still on the bullish side. But for near-term trend, yes, we can see furthermore follow-up selling. On the higher side, until Nifty not now crosses about 21,400, we could see again, whatever minor pullback, if it comes, then we could meet a supply pressure on the higher side. And for Bank Nifty, 47,800 is the critical level for trading perspective.
Okay, Rajesh, stay on. Dr. C.K. Narayan, founder and Neo Trader and Growth Avenue, is also with us. Dr. Narayan, thanks for taking the time out. The momentum seems to have just hit a bit of a roadblock. What's your sense? Is this a start of a down tick or a down trend, or is it too early to call?
Well, see, anything which starts off rather violently generally tends to continue a little more. So now, of course, it's very debatable whether today's fall is a kind of a violent fall or not. So we hit something like 21,680 at the highs on the Nifty future, and we are down by what now, about 300 points or more from the high, 300, 350 points. So given the recent set of reaction, this can certainly be kind of taken as a violent change. Now, what this will do, first of all, to answer your question, I'll actually come to it, whether this is a downtrend which is commenced or not. First thing, what we should expect is that when you have an outsized reaction after a sustained move, something which has not been seen for quite a while. The last time we saw a sustained fall was, when the market went down by about 200 odd points. This was about earlier week and all that. So about 300, 350 points down from the top will kind of seal the highs. If you looked at the option position yesterday itself, you saw that the put sellers had come up to all the way to the 21,500 level. This indicated a high degree of complacence, and I think those people might have been taken to the cleaners today. Now, there was not much of call shots in the system for the Nifty, so I think people were still looking for much higher levels on the Nifty. Across the globe, I think everybody was looking for various kinds of landmarks, whether it is the S&P or the Dow or the Nifty at 22,000 or the Bank Nifty at 50,000. So when this kind of thinking comes in, some amount of complacence does creep into the system. So what this will do is first seal the high at 2160 for the time being, and then we will look for a continuation. Now, if you take the most recent move, which was up from somewhere around 2,900, and that started from a recent swing low. And I think that will retrace to about 50%, which will give you 21,290, 21,300 on the futures. And that is pretty much a target zone for a lot of people. And if that were to break, then you have the 61.8% retracement, which is right into the gap zone which we left, at the start of this week. So that could be somewhere close to 21,200. I think currently I would see that as a lower end of this, and then the market to remain in some sort of a consolidation. But for the immediate future, I think 21,680 should be a high. The lower side, we will take it on a day-to-day basis because there's too much of buying force which was happening, and this was a sudden root shock.
Yeah. CK, very good afternoon. Tamanna here. I'm so glad we're speaking with you at a time like this because it's important to put into perspective what's happening and make sense of it. I just want to, since we've talked about the broader indices which have seen quite a roller coaster ride in the last 1 hour or so, I want to just get your sense of what you're seeing, one, on the Bank Nifty and also on the small cap and mid cap indices. Where do you think this fall could stop? Is this just a small, teeny, tiny purge in the bigger picture of the run-up we've seen?
Well, I think at junctures like this, there is really no point in looking at each of these indices on an individual basis. That's mainly because the sentiment today is a complete collective. Like everybody and his uncle has been bullish on this market, and bullish trades have made money big time for everybody. So whether it is small cap, mid cap, Bank Nifty or metals index or any other index for that matter, everything has gone to all-time new highs. So today, ostensibly, or this is what I pick up from sources in the market, that the market got this scare because of some statements coming out of the US that they are going to declare an airstrike or some kind of military strike against Houthi rebels of Yemen. Now that was one stuff which I heard, but this seems a little difficult, but then not out of the ordinary, because even people like British Petroleum, etc., have said that they are not going to move oil, and movement of oil and movement of goods through that area is very essential. So it may not be out of the ordinary. So there is one geopolitical event which is created this. Second, there was some talk that even though the Bank of Japan said we are not going to change anything, there is still this broad fear that the yen carry trade could be involved with some amount of selling. Now, both these events are a little difficult for the retail trader to estimate as to how it will flow or how it might impact. So I think they will all be driven by prices, not really by news, because war immediately connotes, something wrong and something which can scale up. But stuff like, carry trade out of the yen and etc., that is very difficult for retail to fathom out in sufficient detail. So I think it will be a price-oriented fall across the board, whichever index you look at. And then since we are all trading at such huge highs and have been up for 7-8 weeks sessions for that matter. So a little bit of correction is nothing out of the ordinary. There is enough money waiting in the wings that we need not panic. So even if it were to fall, like I said, 21,200 is the earliest. And then there is another gap zone below that, which is at about 21,050 on Nifty futures. Now, in the larger context, these are 200, 300, 400 points, which are not really of too much significance to the bigger trend which has been going on. But for day traders, for option sellers, etc., this thing can be quite painful. It might extend further because immediately nobody is going to come to buy this market, since it has also happened a little late in the day. It's already about an hour to the close. Today, I don't expect any kind of recovery from the lows. But people may read the news tomorrow, day after. Let's see how it happens. 21,200 definitely seems to be in the cards, and similarly, you'll have levels for the other sets of indices, Bank Nifty included. Bank Nifty could be, exacerbated today because it is the weekly expiry, so that will have a domino of its own.
If I can just, get a little specifics from you, CK, on anything you have your eye on. We are seeing a deep crack in some real estate counters today, definitely on bank counters, on finance counters as well. Anything where you are seeing opportunities at this level, or you would wait for this whole story to play out?
Well, if I look at the time cycle, which I measure even over the shorter term, then I do not have tomorrow and day after as weekdays. Okay, so I would not expect this to really drop down very much. I told you about the levels, so you have those levels in front of you. I would be looking for some opportunities to buy. You mentioned real estate as a sector where some amount of hit has come. I would be a willing buyer in stocks like DLF within real estate. I think that's a stock I might want to buy if the decline were to stop. I would buy into a couple of pharma stocks because pharma stocks hit new all-time highs. Whether it was Aurobindo Pharma or Sun Pharma or Glenmark and series of them, I would be a buyer in pharma stocks at lower levels. Now, whether I'll buy it tomorrow morning or tomorrow evening, that all depends upon how the price action kind of pans out. I think United Spirits is something that I would look at because that's another stock which hit new highs, and that's coming on the back of a very large consolidation. I think Biocon is another stock from the pharma pack which is holding itself rather steadily, and that's one I would look at. PSU as a class have been in very good play. Bharat Electronics is something I would look at. It's drawn down by almost about 4-5% today. So I would think Bharat Electronics at the current level of about 169 and down by about another 2-3 rupees, something that I would look at. The net sum of what I'm saying is that I would still look at lower levels as a buying opportunity rather than, kind of bail out of the market at this juncture.
Okay. Dr. Narayan, we'll leave it at that. Thank you so much for taking the time out and being with us today and giving us your thoughts. Really appreciate your time.
Thank you.
All right. And we continue our conversation with Rajesh Palavia as well. He mentioned that this is a start which is steep. The only question is, can we do more from here or no, is what I want to ask to you, Rajesh. So one, if you were to bet on any of the specific indices headed lower, which one would that be? And are there ideas that you had given to us, and have they changed from the time you gave us until now, because the markets have corrected even more?
So Niraj, I believe that 21,200 is very critical at this moment for Nifty. If it breaks, then yes, we may open a short position for trading point of view on the Nifty, and then possibly we can see a target lower towards 21,050. That for Nifty spot. So we may open a short position if it breaks below 21,200 on Nifty spot with stop loss of 21,300, because now call writers are taking their writing position lower at 21,400, 300 strike. That is clearly giving a sign that, yes, we could see furthermore, crack in the Nifty if it breaks below 21,200. So there we can be in position to open the short. on the index front. The stocks which I've shared, that is, Tata Consumer is still holding the ground as the stock has moved higher in the first half of trade, but again, some profit taking is happening. But still, we do believe that, this is the sector where, in these kind of volatile market, these kind of stocks generally perform, and the buying interest always attract these kind of stocks in volatile markets. So Tata Consumer, yes, one can look to buy at this moment. 960 was the stop loss which one can, keep at this moment. And upside the target where we expect that 1020, 1030 could be the next target for the stock on the higher side. Another space that we like is pharma space, and from that space the outperformer is Window Pharma. Today again some profit taking is happening, but still stock is holding the ground. And looking at the overall structure for the stock, we believe that now stocks hold about 1025. That's the stop loss where I mentioned in the call. If it's hold those level, then I think stock is in comfort zone, and buyers may get a higher target towards 1080 or 1100 kind of target on the higher side. One short idea on the automobile space, some profit taking, significant profit taking is happening in most of the automobile stocks. And we believe that, the kind of structure breakdown is happening on the Eicher Motor. If you look at the daily structure for Eicher Motor, there is a clear trend line breakdown is taking place on the daily chart. So this upsloping trend line breakdown is clearly indicating that, there is some significant profit taking we can see in the stock. There is a short built up again in the today's derivative data. We believe that, Eicher Motor can slide further towards 3900 to 3880. So one can go short in this stock with stop loss of 4030.
All right, Rajesh, please stay with us. We're taking a very short break. Dilip Bhatt joins on the other side. Meanwhile, the cut is getting deeper, over 1% down on the Nifty as we speak. 245, 240 points down. 21,200 levels also look like they may be breached. We're coming back after a very, very short break. Stay tuned. Welcome back. You're watching India Market Close, and the markets are looking like they're really shedding off some weight today. 21,237 on the Nifty, 21,300 levels also broken down. Just look at the huge swing in the day. We opened above 21,500. We're looking like we're close 200 points down. Dilip Bhatt is now with us on the show. He's founder and director at Pedigree Advisory. Dilip Bhatt, thank you so much for speaking with us. What do you reckon are the prime triggers behind the kind of sell-off that we're seeing?
Well, I think the way the markets have moved up, I think these kind of corrections are to be expected, and possibly they should be considered as healthy. And when you are at these kind of levels and with such kind of unabated rise that we have seen in the past 1 month, I think the decline also will at times will happen very sharply. But I think on an overall basis, if you see, there's a lot of tailwind in terms of the FI support, which is now re-emerging, which was absent. The domestic flows still continue to be good. Why I'm harping on some of these is because 9 out of 10 bull markets have really been driven by the liquidity. So I think this one is also not an exception. Otherwise, fundamentally, we are in such a position. Markets are significantly ahead of the intrinsic fundamentals of the companies, of the overall economy. Expected, they will continue to be ahead, but how much ahead of the intrinsic fundamentals, that always remains a challenge.
I just want to come back to Rajesh for a second on levels that we're seeing. Considering that the Nifty has shown a very sharp and downward move. Rajesh, where do you see the bottom of this on the charts?
I think for Nifty, 21,200 is the first level, and second level is 2150, 21,000. That's the level where I think this selling will should get absorbed, as overall structure is bullish, and the most of the monthly options positions are put base is around 21,000, 21,200. So I think that level is likely to defend by the Nifty. Yes, we may see some knee-jerk reaction below that, but again, market may attempt to get support buying action around those levels. So one needs to watch, as we have already seen that we almost touched the level of 21,200, and some recovery is taking place from those levels. So for day-to-day perspective, 21,200 then 21,050, these two levels needs to watch for near-term trend on the Nifty.
Okay, Mr. Bhatt. Before we take that break, one quick question. Thank you for joining us, of course. The culprits of the fall today are some of the high flyers of the last few days. That is to be anticipated as well. My question is, the PSU banks, some of the defense names, real estate names, have seen some serious buying from well-heeled investors over the last few days. Would this correction in any of these pockets be viewed as a buying opportunity? And if so, is today that, or would you wait for a few days?
Sure, I think some of the sectors which you are mentioning, possibly, the way they have moved up is more on expectation. And except for the real estate, where you can see that the up-end real estate market is doing beyond everybody's expectations, whereas the low cost housing continues to be still languishing in terms of the numbers. So I think as far as the real estate is concerned, I think on an overall basis they continue to do well. But as far as the other sectors are concerned, I think they have moved up much ahead of their performances. They are basically based on the order book that these people have. We should actually see 2 cycles, of their performance, their execution, before you come at a very sustainable kind of recommendations on any of these. So if you ask me whether one should buy right now, no, I would not be in a hurry to buy. I would prefer to wait and watch.
Okay. Stay on, we need to take a commercial break, no ways around it, but the markets are not looking that great currently. Let's see if there is more in store. We'll continue our conversation with both our experts, come in and talk about some specific pockets of news flow as well, and of course, top BTST areas too.
Markets now close to day's low. The 21,200 lower end support has also been breached. It's cracked your 21,187 right now. I'm going across to Agam. Today, Agam, was the day for weekly expiry of Bank Nifty. There must be quite a scramble there, looking at where the Bank Nifty is right now, below the 48,000 mark.
Oh yes, it's certainly taken a lot of traders by surprise, and the expectations were somewhere around 48,000. That's when we were expecting to expire, at least as far as these contracts are concerned. That's not coming through. I'm going to talk about that in just a bit. As far as the Nifty is concerned, we are looking at weakness, and Nifty will be in focus tomorrow, because tomorrow is the weekly options expiry for the Nifty. And for now, we're still seeing an increase of around 3% towards open interest, but at this point in time, considering we're taking a knock of 1.25%, most likely this is towards fresh shorts. Let's bring up the Bank Nifty futures as well, and that's where we're seeing an unwinding of around 6%. Do remember that over the past couple of sessions, we are starting to see increase in OI even as the index moved higher, but now we are seeing longs unwinding in this index as well, even as it comes off by around 0.75%. Coming down to your options, what's really happening here is that at the moment we are looking at more and more writing around 21,400, 21,500, even though we are now well below this mark. So this options, activity is most likely to shift downwards tomorrow as we move into that specific weekly options expiry. And this is how open interest distribution has panned out. Once again, the 21,500 call takes precedent, and now we're seeing more and more selling with traders pegging it that it's unlikely that we will see the Nifty expire above that mark tomorrow. On the lower end, the activity also shifts from 21,400 to all the way to 21,200. So 200 points decline as far as your range is concerned as well. Going to quickly talk about the bank Nifty options as well. Now, we're clearly off the 48,000 mark, as I was mentioning. The expectation was the expiry would be somewhere around there, but at the moment, we're more closer to 47,500. So we've seen a sharp decline in the bank Nifty, and it's caught a lot of the put sellers on the lower end by surprise, which is why they have had to unwind their positions, and that has in fact actually also led to more selling coming through as far as your index futures are concerned. And that's the kind of cascade effect that can happen every now and then when you do in fact have such a sharp, swift move in a very short span in time. Let's take a look at all the stocks, and I reckon there won't be too much in terms of advances. Still, we are seeing some longs building as far as HDFC AMC is concerned, but a lot of weakness in Abbott, Ultratech Cement, Astral, Deepak Nitrite, all of them under pressure. So shorts building up there. And in terms of those stocks which are seeing unwinding, well, you can see longs unwinding across. So IRCTC, Delta Corp, Exide, Dixon Technologies, and Coal India, all of them are seeing a decline in their underlying to quite an extent, in fact, for most of these counters, even as we see the open interest decline substantially as well. So weakness all around in the broader markets as well, bringing the benchmarks further down as well.
Thanks, Agam, for that. Well, clearly some pressure in a lot of pockets. PSU banks, and they are very widely owned, and hence it becomes an important question. Mr. Bhatt, come in on this pocket. Profit booking, some people would argue, is warranted, but a lot of people invested in PSU banks. Now, the question is this a good pocket to bottom fish? If so, are these good levels, or would you wait? And if you don't like it, why don't you like it?
Sure. I think, as what you very rightly said, there's been a lot of buying in PSU banks. But I think PSU as a team also has done extremely well in the markets, and almost all the PSUs have really gone, they've gone through the roof without any doubt. Coming to PSU banks, I think the finance sector, as we all know, after all the cleanup, they're in a very sweet spot, and all ready and poised to capture the growing credit markets, and also the increasing CapEx that what we are expecting is bound to get reflected in the economy and also in the bank's balance sheet. As a perspective, certainly on a valuation basis too, the PSU banks look pretty good and pretty compelling and pretty cheap. But my only worry is that it has already had a good run-up. From here, whether we can expect any of that kind of run-up, I'm not too sure. Maybe there could be some momentum play still left because of the financial sector and because of PSU as a theme, and that's why the PSU banks. But otherwise, myself, I will not be too keen to buy the PSU banks. But SBI still looks pretty interesting amongst all these PSU banks, because the way the others have moved up and SBI has still not really gone anywhere in their comparison. I think SBI still looks pretty good and pretty interesting from the current levels.
What PSUs do you like then, Mr. Bhatt?
Well, as what I said, as far as the PSUs are concerned, I would say that the major portion hasn't happened and it has moved up. I'm not too keen to buy at these levels. I will still wait, because if I want to wait, I will still wait for BEL, BML, particularly these two stocks, which I will wait. But otherwise, if you ask me that whether I should buy any of the other stocks, no, I'm not so great a fan at the moment. Because not that I don't like it, but they already moved up too much for my liking.
Okay, sorry. I thought that was only with PSU banks, but I think that's the answer for PSUs at large as well, and BEL, BML, a couple of others that Dilip Bhatt likes. By the way, BEL will be in conversation with us tomorrow. on India Market Open, so you might want to tune in for that. Rajesh, very quickly, any of the PSU banks up for a trade?
So at this moment, for long side, no, we will wait.
On the short side?
Yeah, on the short side, I think one can look to short at Canara Bank as there is a breakdown of last 5 days consolidation range. And I think looking at this breakdown, now stock is on a verge of giving breakdown to its 20-day moving average also. So I think there is a clear short build-up is taking place in the Canara Bank. One can go for short in Canara Bank future with stop loss of 436, and on the downside, I think this stock can slip further towards 415 to 410 level.
I was just looking at the PSU back, and a classic sign and classic signs of corrections coming in where everything that has run up is seeing the deepest cuts. So the Nifty PSE seeing deep cuts, like we said. IRCTC down about 7%, REC, PFC, all of those players, Coal India, which had seen a good run up. So I want to extend that. I wanted to expand that, Rajesh. You talked about PSU banks, but what about that entire pack of public-owned companies which have seen this kind of run up? What would be your strategy here, and any picks where you have a specific idea of what you could do tomorrow with these?
I think we have seen a very strong run-up in most of the PSU stock. Yes, this is the first bout of profit taking is happening in across the board, and PSU is also the part of those profit booking. I think one should wait for further down move, because this is the first day of significant profit taking is happening. So I think we are in position again to buy BHEL again if it's available near to 165. That's the good level again to re-enter in the BHEL on the downside. So another 2-3% correction if it's happened in the BHEL, that stock will again be attractive to buy on the downside. Again, if we look at the IRCTC structure, very strong run up in last couple of trading session, and today it's a significant profit taking is happening. But again, if we look at the near-term, short-term structure, the stock is almost now trading around its rounding bottom breakout on the weekly chart. That support area would come at around 770, 780 zone. So another 2-3% correction in IRCTC would be again, opportunity to re-enter in the stock around 780, 770 zone with stop loss of 750. So I think these two stocks one can look to buy in this decline. As already correction has been taken place in both of the stocks, and so we are ready to buy this stock if we get another 2-3% cut in these two stocks.
Yeah, CTC is one of them for sure, which is today seeing a beat. But even in this sea of red, there are some pockets of green, and Oil India is one of them, holding on to 6% gains in a market like this today as well. What is the news flow around Oil India? My colleague Varsha joining us with details.
Good afternoon, Tamanna. So if you see, All India has an intraday high of almost 19%. Now this was on back of volumes. Also, the factors in play, if you see, one of them being Brent prices. So increase in Brent prices actually help oil exploration companies. Because of higher realization, the sales of these companies go up. Also, if you see, the prices are closing higher in the past 2 sessions, and Brent prices is up 6.7% in last 2 weeks. And the second reason being, government has reduced windfall taxes. So the tax on domestically produced crude oil has been reduced from 5,000 per ton to 1,300 per ton, and also the tax on export of diesel has also been reduced to 0.5 a litre from 1 rupee per litre. Also, if you see, Antique has come out with a report on Oil India where it has maintained buy rating and increased its target price. The reason being on the company is on track of 21% and 51% growth in oil and gas production in the medium term. So companies to drill 65 wells in FY24 versus average of 40, and also the cumulative capex of FY24 to 26 is expected to be $3 billion, and its Numaligarh refinery's capacity expansion is to be completed in FY25, making a company an integrated oil company.
Yeah, thank you for that, Varsha. So Oil India looking up. And, we're going to get into our BTST ideas in just a bit. But before that, I want to come to Dilip. Dilip, any views on Oil India and the entire space? Because, we have another bit of a crisis brewing, which could impact crude prices. At least we've seen crude prices react to that. And we're talking about what's happening in the Red Sea. Does that concern you at all from a broader global markets perspective, or do you think that Indian markets right now going through their own jig and perhaps a bout of much needed correction?
Sure, I think we all know that, any spike in oil prices, and we are directly talking about the inflation and of course the rupee depreciation too. So I think certainly that will be looked with a lot of apprehension. This particular factor, which can possibly holds a danger of potential to spike the oil prices. But having said that, I think I would still prefer within this PSU space some of the OMCs and particularly the likes of IOC. There may be a temporary impact because in case if the oil price goes up. But OMCs and particularly IOC looks pretty good and interesting for me from this oil pack. And I would look at that. I think GAIL is another company which is emerging as a reasonably good story to bet on.
I also want to sort of keep the focus on what is happening in some real estate counters and some NBFC counters. Piramal Enterprises, one of them that we should look at. India Bulls also seeing quite a bit of pain, and I'm going to come back to you, Dilip Bhatt, on, since this morning, we've been talking about the possible impact of the RBI moves and the crackdown on certain kind of AIF investments, and the broader idea is to avoid evergreening. Do you think that some of that is playing out, or is it sort of a red tide in which, everything is getting hammered?
Well, I would say both the factors are at play. But this particular policy, we need to really understand that in a lot more details. Whether this the idea is to stop the greening impact by some of these NBFCs, and possibly that will ultimately get reflected in the NPAs. So surely, I think some of these worries will play out, but we need to understand what exactly the policy is trying to stop apart from greening. And very, very frankly, I haven't gone so much into the depth of that particular policy. But I would say, yes, it will certainly have an impact. And not just on these two couple of companies, but overall on it for the NBFCs too, it will cast its shadow.
You have a lot of counters. Just want to add to that, Niraj, your IOB, Central Bank, all of them, UCO, all seeing quite a bit of pain. IFL Finance as well, down about 7%.
The thing is, I was just looking at some of the chatter in the market, Tamanna, and some talk of a scare around respiratory diseases. And there is maybe, I don't know if there's some meeting of the Indian Health Ministry or no on, but there is apparently a COVID scare, which could be one reason why there is a very idiosyncratic move in our markets today vis-a-vis the rest of the markets.
So I'll just tell you what has happened on the news. And before we come to any conclusion on what has happened is that there was a meeting yesterday by the Health Ministry, which has put out an advisory saying that the JN.1 subvariant has been detected in India. So far, there are some cases which have come in. The state of Karnataka has said that those who have comorbidities over the age of 60 should revert to wearing masks. So in this new COVID variant, the active caseload has become 1828 and one death has been reported in Kerala. Now, so far, what the government is saying that it's nothing to be really scared about, but this is a new variant which was first detected in Luxembourg. So important to know the facts, because at a time like this, everyone is scrambling for reasons and to understand what's happening.
Most certainly. And which is why one doesn't know if this will last or not. But if indeed this is a reason, as 2 or 3 people in the markets have just messaged, somebody from our newsroom has also called up a few dealers and tried and figured out what's happening, and one of the reasons could well be this. Don't quite know, but let's wait and watch if markets show some semblance of sanity towards towards trade tomorrow, or does this worsen? But let's wait and watch. We will keep you updated with all the conversations that we have with various dealing rooms and try and figure out what's next. But for now, certainly some bit of pressure ahead. Mr. Bhatt, before we take in closing strategies, actually, I don't know if you got a chance to talk about the RBI moves as well with regards to AIFs, but it's not just with regards to the AIFs which has gotten, 2 specific or 3 specific pockets down, but just the caution that they've generally sounded on unsecured lending, so on and so forth. Are NBFCs a point of consideration from a trade investment perspective, or would you just be very circumspect on that pocket currently?
So my interactions with some of the captains of the banking industry suggest that the RBI move has been in the offing for some time, as they have been flagging off their concerns about the tremendous increase in the unsecured loans, and we all know that they give it a much higher rate, and we also know that this particular portion has really shown a very good increase in the overall credit growth, and also in terms of helping them to improve the NIMs. Having said all this, my understanding is that it is not going to come down. The demand is not really going to come down in any big way, but maybe with the combination of what the RBI has just announced, it will still have some kind of an impact, and possibly, though it's too nebulous to really talk about it at the moment, but surely I think the way the markets are poised, there will be some breather, some wait and watch that possibly may happen in this particular segment.
As we wind down to the last 10 minutes of trade on what has definitely been a painful end to the day, we're 300 points down now, and 300 plus points down now on the Nifty. I just want to go to Rajesh Palvia for his BTST ideas. What do you do in a market like this, Rajesh?
So I think there is one sector where we are clearly seeing that liquidation is taking place, that is real estate, and I think DLF is the stock where we are seeing now breakdown of last 4 days consolidation. Looking at the behavior of sector, we believe that DLF may continue furthermore weakness in the coming trading session. So one can go short in DLF future with stop loss of 682 and downside target we may see towards 655, 645. The other sector where we are seeing a clear selling pressure, or we can say profit booking, that is IT. So Infosys from large cap IT, this is the third day where we are seeing that weakness is taking place, and I think this is the sustained selling pressure is taking place in Infosys. So I think Infosys is one stock where one can go short. So future target on the downside we can see towards 1510 or 1500. One can keep stop loss to go short around 1568. The one stock that we like on the buying side, that is ONGC. Overall strength in the stock, and in this kind of volatile market also, the stock is still holding the ground. And looking at the open interest addition in last couple of trading session, I think we believe that if market stable at certain point, that ONGC can continue furthermore outperformance from the current level towards this for this December expiry. I think ONGC one can look to buy with stop loss of 196. On the higher side, we can see a target of 218 to 220.
Okay. Well, so that's some trading ideas as well. Mr. Bhatt, just one final question from my end to you. We're now starting to see telltale signs of how some fund managers are getting a bit cautious. There are 2 or 3 which have stopped taking money. Exuberance on the SME end for sure, on the IPOs and the kind of subscription, and a clutch of bulk deals, block deals that are getting done almost every second or third day. Does this worry you, or do you believe that with the liquidity sloshing around, this is par for the course?
Well, I think this thing has been there now for some time that the promoters have been selling. And if you see, some of the FIs have been taking an exit, and some of the FDIs, that also selling has been happening. So what I would say is that it's not something which is really new, but as what you very rightly say, maybe the intensity still continued. And more so, I would say a lot of companies making issuance of preference equity, a lot of IPOs around. So I think, very frankly, you require more of such things to happen if market has to not just run. I mean, if there has to a further runaway rise from these levels has to be prevented, then these kind of dilutions are must, the IPOs and all those kind of things, the block deals and all that, so that market really gets satiated properly. Otherwise, there will be a lot of, the kind of the liquidity which is going around. So I would say, am I worried about this? No, not really. I think these things have happened. These things will happen. And I think this plus the IPOs will compete for the money which is in the market. So on a longer term basis, I don't think so. On a short term basis, possibly a bunching together may create some kind of impact. But otherwise, these are part and parcel of the long term bull market.
Well, 1.5% now for the Nifty 50, and that is the worrying part, really. That just the kind of day it has been. There has been, in the last 1.5 hours, there has been no attempt at a pullback. It's just gone down one way. Now, again, like we said, it could be due to this fear that we spoke about, or otherwise, because remember, viewers, for people who've tuned in the last half an hour, the world markets and Europe, which is open right now, is not showing any kind of chinks in the armor. European indices are still trading in the green. By and large, most of the European indices, okay, there's a bit of a pullback into CAC and DAX, but they was flattish. FTSE is still up about 1%. So no big dramatic moves at the global markets. It's just the local markets which seem to be facing that pressure. Bank Nifty is now about 1% down as well. You know, what's come off, Rajesh, quite strongly, aside of everything else, and we've spoken about NBFCs and banks too, are some of these chemical companies which are just showing signs of a momentum build-up and have pulled back quite sharply. Anything in this pocket that on the charts may be looking vulnerable?
I think underperformance was there in chemical space, but again, these kind of sell-off again spooked the selling pressure in the chemical space. I think SRF one can look to go short, because looking at the overall structure, it was failed to cross its multiple resistance zone that was there at around 2500, 2450 zone, and again selling pressure is there in the stock. So looking at the structure for SRF, we believe that, now if continues to trade below 2400 mark, then possibly we can see further more pressure in SRF towards 2320, even 2270 kind of level on the downside. So one can look to go short in SRF at this moment. Keep your stop loss at around 2430 to remain on the short side for SRF.
Absolutely. Rajesh, just a couple of counters that I want your take on, and one, again, which will see a lot of volatility. I want to come to you on Piramal Enterprises, and I want to come to you on Z. Both of them are some of the top losers today, apart from, the PSU banks also, which you've spoken about. Any kind of lower level support forming over here?
So Tamanna, Piramal is now trading below to 200-day moving average. The way stock has slipped in today's session is showing that, further more weakness we can see in the stock, as the stock has broken its, support area of November 2023. So I think if it's remain below 900 mark, then possibly we can see another round of selling pressure, and then we can see a lower target towards 850, 840. So Piramal, again, don't buy at this level. I think there could be another round of selling pressure we can see in the stock. As you mentioned about Zeal, it's almost trading near to its critical support area of 248. That is the important level on the Zeal. chart. And now if it's Z break below 248 mark, then possibly we can see another round of selling pressure. Though stock is reacting to the news and a lot of news flow is taking place in this counter. So I think 245.48 is the critical level to watch for in tomorrow's session. If it's break, then yes, one can open a short position for lower target of 235, 230.
Just a last quick word from Dilip before we go into closing trade and view of how markets have closed today. Dilip, what would be your top strategy for tomorrow after a cut down like this? Will you first wait and watch at the beginning of trade tomorrow?
Sure, I will not be in a hurry to buy at the moment. I mean, possibly I would hold on at the moment. Wait, hold on to whatever I'm holding, but not be in a hurry to buy. And actually, as what I always said, these are one of those phases which one just has to flow with that, because it's otherwise very difficult to explain everything on a fundamental basis. So what I would say is, yes, I would prefer to wait and watch. I would not be in a hurry to commit anything immediately.
Sometimes we try and look for reasons while some may not be apparent immediately, and that's actually true. Thank you so much, Rajesh and Dilip, for joining us today. All right, let's look at what markets are looking like as they close, and it's not a pretty picture. It's not a pretty picture at all, considering that you started off on a very, very strong notes on the Indian markets. Remember, you started off above 21,500, but as you've gotten to close, you're over 1.5% down, 350 points down on the Nifty. And very, very crucial levels being cut through like a hot knife through butter. So 21,100 is also looking like it might be breached by the time we get to the last 1 or 2 minutes of close. I want to look at the Bank Nifty and see what's happening there. The Bank Nifty has also had a tough day. Remember, it was your option expiry or weekly expiry on the Bank Nifty, and that has also lost about 600 odd points, 650 odd points. Let's pull up the heat map, and I don't think you're going to see any green there, at least on the Nifty 50. All right, so 3-4 standouts over there. ONGC up there because crude price volatility works for an ONGC, and that is up 2%. But look at your largest losers, and everything that has seen a run up is seeing pain this morning. So Tata Steel, the Adani pack, Coal, UPL, HDFC Life, all of it. I want to just look at the tech pack, and if you could pull up the Nifty IT and its components, that would be good. Because remember, this morning we were talking about how Indian IT stocks seem immune to the Accenture impact. Accenture put out its numbers yesterday, and it showed that they're not going to be possibly any specks of great news for Indian IT in Q3. But the stocks were still up. That has reversed. Coforge, one of your big movers the last few sessions, has lost the most. Broader markets, let's take a look at broader markets, because even though the Nifty is deeply cut, the pain, frankly, is on the broader markets, not just mid-cap. I want to pull up the small caps as well. The mid-cap down 3.5%. So where you have 1.5% cut on the Nifty is 3.5% on the mid-caps, nearly 4% down on the small cap stocks as well. Let's look at advanced decline ratios, and that's going to give you a sense of how the whole story changed through the day. So you started with a big gap up over there. You started in a good mood, but over the last hour and a half, something's changed. Now, it could be a whole slew of reasons. There's no point really speculating what the reasons could be, but very clearly there has been a complete change in mood that you have been seeing. Now, the broad sense seems to be that perhaps that's not necessarily a bad thing in a market that has run up to this extent. And let's just go back to the heat map to give you that overall picture. In a market that has run up to this extent, maybe you do need to take a pause. You need to take a breather and just evaluate. Some bouts of profit booking were bound to come in. But why with this haste and this intensity is really the question. So that's why we're leaving you on India market close. It's been a tough day for traders, at least in the last hour and a half. But we'll take a very short break. Stay with NDTV Profit. A lot more coming up on the other side.